So 2023 coming to an end. Reflecting back, do you feel what we talked about happening in e-commerce going into 2023 last year, did it come to fruition? Do you see specific changes? What is your confidence level on the e-com ecosystem as a whole, from Shopify to marketplaces, subscriptions, and beyond?
So I think it went exactly as expected. This entire year was, economic uncertainty, and that's what we saw, right? Advertising became more difficult because of the economic uncertainty. Discretionary spending was down, and when people were spending extra money, you saw the U.S.'s debt overall go up, which is not a good thing, especially since so much of it was cleaned off in the previous couple of years.
So when you say it's exactly the way you went, like what are maybe some of the things that stand out to you that you're like, hey, we called out these 1, 2, 3 things and they came to fruition?
Sure. So right away, you look at what occurred during the pandemic, right? We saw this blip. You're looking at e-com, and this chart is just going up and to the right, and it's a slow and steady race. And then we saw, with craziness during the pandemic, it just shot up like a stock that just drove their quarterly to the best of their ability. And there were two thoughts during that period. You had the one side that was like, oh, this is the new normal, when in reality, they were incorrect, right? And you saw a bunch of large companies make that mistake where they overhired, and that's one of the causes of the mass layoffs we've seen this year. And then you had the other court that saw it for what it was. It's a blip in the radar, and it'll normalize afterwards. And if you look at 2019 and then 2023, yes, there's that anomaly in between, but it's pretty much on pace to where it should have been. We just had this anomaly that was caused by the pandemic, and with that came mistakes of overhiring. You also saw a large influx of new brands, new merchants, hey, let's start a business, right? And the reality is a lot were not product market fits, but they had success because they were a product market fit when you're stuck in your house shopping online and you have nothing else to do, right? And in the reality of us being allowed to go outside again and go about our lives, they weren't product market fits. So I think you had a lot of noise during the pandemic e-com boom, and now we've just normalized. And I think we'll continue to see this normalization.
Now, do you think we normalize, or do you think maybe the pandemic and leading up to today, where we are with ad spend, acquisition costs, and everything, did it for certain verticals, especially on when we talk about smaller scale businesses, did it maybe oversaturate the marketplace?
Well, I think all of the above. I think we normalized, but I think there was definitely oversaturation. And you combo that with a post-iOS world and a world where Meta is going to raise advertising costs to try to make shareholders happy. You have all these variables all working at the same time. So I think it's not a single one, it's all of them. It's that too. You then at the same time had all these people thinking that I'm going to start a business and Shopify is going to help me do that. So you had all these these micro brands start up. Some had success and became legitimate brands, but with all those other variables, many were just, their destiny was not a good one. Their fate was not going to be a good one. And they were kind of blinded by variables and blips in the radar that were not normal.
For me, and I'll start with the pandemic, I always argued, and I still believe, looking back, but especially at that time, I always talked about this is an artificial economy. And what I mean by artificial, it's not here to stay. Of course, it really happened. We responded. The world stopped. The market kept going up. People kept hiring. It just wasn't a normal environment by any stretch of imagination. So to me, this is going to come to a stop. And when it comes to a stop, there's going to be a shock. And I don't necessarily think it stopped. I think I was wrong on that. I think it kept going, but the shock came through some of these things you mentioned, advertising costs going up, all of these variables, and which makes sense. It's supply and demand. There's a lot more demand for advertising. Well, guess what? Meta's going to say, I'm going to bump up the prices because people are willing to pay for it. Now, the other component for me, and I think we have 2 to 3 years to fix this. Look at the economic landscape of e-commerce. It reminds me, especially with the amplified or the accelerated growth in e-commerce because of the pandemic, of the dot-com boom.
Sure.
Everyone and their mom, built a website with the dot-com boom, invested into a dot-com name website. We discussed this
Everybody
before.
started a Shopify store in the pandemic.
Exactly. So it's the same thing that's happening. So I think what's now, and I was talking to someone, might have even been you, I'm not sure, but we were discussing of 10 years ago. It was kind of like dot-com boom. If you build it, they will come. Same thing with e-com. If you build it, they will come because Facebook was cheap. New platforms were coming out.
We were acquiring customers for $3, $4 a piece.
Yeah. Now it has swung completely. And I think if we continue to focus on, which I'm not against, it just needs to be done the right way, this like enablement for everyone to start a business, that's great, but it's not sustainable. A lot of people are going to invest a lot of money, maybe life savings, whatever, to start an e-commerce brand because a lot of these gurus and drop shippers, whatever you want to call them, sell this fake dream, and I hope all of them get busted, about how easy it is. It is hard as hell.
Not easy, right.
And it's harder now than ever it was before. So what somebody did 10 years ago, you ask them to replicate that today, there's no way. It's a completely different approach. So I think in the next 3 years, and this year is showing me that, I think we're going to see a consolidation or a down spiral of e-com based brands that are not going to be able to sustain that. And when that happens, tech companies are going to get impacted, agencies are going to get impacted. There's going to be a huge trickle-down effect that I think can spin out US, Canadian, and the global economy out of control if we don't become a lot more responsible as an economy, as a e-commerce economy, of how we're handling things.
Yeah, I mean, I think we're already experiencing some of that, right? It's been going on. You look at e-com news, and some pretty decently sized, well-respected brands and companies this year have filed for bankruptcy or closed down or gotten acquired in a deal that was not advantageous and a big payday, right? There's a lot of that. So I think we're already experiencing aspects of it. I think we're going to keep experiencing it for probably most of 2024. Now, you can argue there'll be some stimulation towards the back half of the year just because it is an election year in the States, and we know how that goes, right? Everybody wants things to look good. So sometimes there is stimulation that is artificial to cause certain
question
things.
There with the election year, I think there is stimulation within pockets of the economy, but one thing that scares me from the election year, specifically for e-com, and I don't know if you guys experience that, is the amount of money they pump into advertising because of the ridiculous raising and the billions of dollars that go into these campaigns now. Does it make harder to compete on a secondary level now in your position? Yeah.
Costs go up in that time period leading up to an election of that big of election.
So I know this is not the topic or reflection, but I'm going to ask you for a prediction, and maybe we can go into it on a recording next week. But just a little quick foreshadowing. When you know that's going to happen, what kind of adjustments do you guys make on the marketing end, if any, or do you guys just write it out?
I mean, I think it depends on how bad it is, right? For us, it's a very basic formula for where and when we advertise. And is it profitable? Yes. Continue. If it's not, we don't, right? And we can lean on organic and our email list and other avenues, right? And we can move the needle with those other avenues as much as we can with ads. But if it's not profitable, we won't do it. And in theory, if more people and a lot of people take that approach, then it should normalize the costs.
So, I mean, do you guys prepare, I guess the better question would be, do you guys prepare with a plan B? Hey, once we exceed a specific acquisition cost and it's too much for us to take on, do you guys kind of go like activate plan B, and instead of sending 2 emails, you guys send 6 emails a week or whatever the case is?
Yeah, so So I mean, we always have, a backlog of things to test, other approaches, other copy, other offers, and some of them are going to work, right? And it's never going to be the point of we can't acquire a small amount of customers for a certain amount. It's never going to be that bad. It's going to be, is it profitable to scale, right? Because we're acquiring a customer, let's say for $60, right? As we increase that spend and it goes from 2,000 a day to 5,000 a day to 10,000 a day, we're not going to maintain that acquisition cost. It's going to slowly tick up, and the question is, how high can we take it, right? Where it's not profitable. So I think the problem is just the scalability might not be there. It's as simple as that. So you're not putting up the big numbers that you might.
Okay. So according to the report from the Census Bureau of the Department of Commerce, we've gone as e-commerce up from $1 trillion to 1.1 trillion, which is a 7.5% increase compared to last year. Last year's increase was 9.3%, 2021 was 26%, 2020 34%, so on. And it makes sense because of the COVID effect that we discussed.
Sure.
Looking at 7.5%, depending how you look at the data, I guess you could almost argue that's really not even growth because of inflation.
Yeah, inflation offsets it.
Yeah. And I read a long time ago, and I don't know who to get credit for to this for, but it always stuck with me. I read in a book in which I 100% agree with, if you as a business are not exceeding the market growth, 10% on average, 10%, whatever it might be the case, you're dying. Now, I don't want to say e-com is dying. I don't think that's going to be the case or going to happen. I think there's going to be a slowdown, and I think the slowdown is because of confidence of consumers and a bunch of other economic.
Yeah, I think that slowdown is exactly that, right? It's discretionary spending being down because of economic uncertainty. It's the arrival of all of these brands that aren't truly market fits that came up during the pandemic. It's rising ad costs. It's a bunch of variables, right? But that is the end result. It's shocking. Even established businesses that made this mistake of trying to scale and grow too quickly during the pandemic, not knowing that it was an anomaly, just looking at their financials, there's a lot of e-com brands that are not in good spots, right? And whether it was bootstrapped and you're not in a good spot, or you raise money and you're also not in a good spot. We know that the cost of raising money is vastly different now and much more expensive from, simply interest rates, but also covenants and expectations from investors. And you flip that side on the bootstrap, but it's the same thing. If you're bleeding money, you don't have anywhere to go. And as an example, I would say probably for the last 4 or 5 months on average, I'd say 3 to 4 deals across my desk, potential acquisitions for us that we can tuck in to our enterprise. And the scary thing is, almost every single one of them, it's not a good story. It might look like a good story, but when you dig into the finances and you start understanding their business a little bit better, it's not a good story. And it's as simple as, this company's gonna be dead in 6 months on its own. What is it really worth, right? And you can look at it in other ways of trying to come up with value, but there's a lot of e-com brands that are not doing well, that are on life support right now.
Yeah, and I remember, I'm not gonna expose too much, but we saw the first hints of it. You and I were together at one of the conferences, and we looked at a publicly traded e-com company, and we looked at the finances, and we looked at each other and was like, this doesn't make sense.
They were speaking. Yeah, I know exactly who it was. They were speaking, and we were both sitting at the table, and it was like they're positioning themselves as this expert that accomplished great things, and sure they did, they went public, but a quick look by you and I, no, we're not CPAs, right? We're not finance guys. A quick look, there was something awry.
Yeah.
And sure enough, they were one of the companies that died this year.
Yeah, and that's the thing, and I see it everywhere. I see it with agencies, with e-commerce companies, with SaaS solutions, when they become a kind of like evangelist of their own brand, which I think to me is always like a why do you have to evangelize your own self? It becomes a big concern for me, and I see a lot of that, and I see a lot of brands, unfortunately, that are struggling. And some of these brands that we talked about, and the brand we just discussed that went public, I think it was this false conception of COVID trend is here to stay, which to me, with any experienced operator, would be able to look at that and say, hey, sure, leverage it while it's here, but also know that, government writing people $5,000 checks or whatever it was and sending it to them every quarter, it's not a long-lasting strategy for any mature economy. And it is a temporary solution. Whether we agree with it or not, is that it happened, but everyone should have known that's not going to happen, and people are not going to keep getting $10,000, $15,000, $20,000 to spend as they want it. I mean, even now when you read things about like the PPP loans and how many people abused it, and they bought Ferraris and cars and whatever, and it didn't go to employees, I don't know, to me the writing was on the wall. But it's not surprising to me that we are where we are. I felt, and I know you and I discussed it a lot, that the growth that people are projecting is not going to be there. One thing that I wish would happen more, and this is, again, I'm going to go back to the pandemic and move forward. I think there's a lot of people who run private and public companies and all of that for their own interest are sometimes not honest with the crowd. And these are smart people that I think capitalizing on an opportunity in a false manner is something we all need to hold each other accountable for.
100%.
And not like pump up this dream that if you do certain things in the economy, I don't care what business you're starting, it is not what it is. It's always easy to start and do anything when things are great. But people, in my opinion, that start businesses this year, next year, when things are rocky, and they can navigate starting a business through this environment, when things are great, they're going to remember the tough times. They're going to be a lot more careful and protect that hard work. But I think that all of these businesses, not all of them, but a lot of businesses start on the up and up. When it becomes turbulent and the acquisition cost goes double or leads stop coming in, they don't know what to do because the economy is no longer feeding them. They have to go into the economy and gather and hunt for resources and their leads.
You're spot on. It's funny. So we had an agency that we were using. We don't use them anymore. I don't want to name them. I'm actually like the individual that runs it, and I'm friends with some of the people there. But during they came on and onboarded with us in the end of 2019. So they got Q4 this is an ad agency. They got our Q4, which is traditionally going to be better than most. And then they rolled straight into the new year, little blip, pandemic in February and March. It starts, right? So they rode Q4 of 2019. They then rode the beginning of the pandemic. Then we gave them a Netflix show in July 2020. So they were looking like rock stars, and they thought that they were rock stars. But then once the pandemic got over and the Netflix wasn't as going as it was, all of a sudden it was rocky, and they weren't as good as they thought. But you see that, right? There's so many examples of...
Why do you think people are not honest with themselves? Like, when we did ads in my previous agency when we sold it, like the first question, anytime we saw a positive influence on the ad, now we might have made changes and we might have done things, but we always considered that our change was the least impactful one. And the reason we did that is we would then go to the brand or the merchant and say, hey guys, what kind of PR, what are you guys doing that could have influenced this? And sometimes it was literally nothing and it was all of our strategy.
Yeah.
Sometimes it was something they didn't even know about, and maybe somebody posted an article and then
Right.
we saw a new backlink or something and that spiked it up. And then sometimes it was just like you said, there were strategic things they were working on that were not digitally driven, but influenced the digital landscape.
Sure.
So like, I just find it kind of like interesting that agencies and brands too, why are they sometimes like in that moment not honest with themselves and say like, hey, this is not as good as it is. We're glad it is as good, but it is being driven by some of these external factors.
Yeah, They don't. Nope. They don't ask the questions, right? So our current agency actually does when there's, a blip in the radar, to use that term again, and we're talking about this big uptick. They ask right away. Current agency, they say, hey, did you guys do something? And that's what you should be doing. That's what you guys were doing. Yeah, so I think they don't do it. Human nature is not, people suck. I think 2024 is going to be a challenge. I think we'll see more brands fail. We'll see more companies fail, more agencies fail. It's across the board. People will be failing. And it's because they're not running fundamentally strong businesses.
So for you, I guess the signals that we're getting for 2023 going into 2024, what are maybe like the two things, if one thing, whatever you want to say, that you would tell brands, make sure you fix this. If this is wrong, your shelf life is very, very low. And what would that be? Just like generally speaking, I know every company is a little bit different, but like what's maybe that one big signal where you're like, when you sit down with your team and you're like, okay, that doesn't look good, we got to fix that. What is that maybe one metric that they have to make sure that is right?
The reality is, this is the time where you have to be profitable. I think you have to be profitable on how you're running the business from an OpEx standpoint. I think you'd be profitable on acquisition. I think it's not the time to spend money just to spend money if there's not a return on the investment.
So basically, it's forget the top line right now. It's not about top line. Make sure you're focusing on bottom line, making sure you're creating a cushion for yourself. Make sure that you're kind of setting yourself up when it's time for growth. Not to say that you shouldn't grow next year, but you need to balance a little bit more.
Yeah, I think that's accurate. Thank you for articulating what I couldn't